Hi everyone. In the previous Chapter 2 video, we posted business transactions for the month of January for Craven's Consulting Service to a spreadsheet and found new account balances at the end of January. In this video, we will continue the exercise by discussing the process of preparing financial statements. Please pause your video for a minute and turn to page 35 in your textbook. Let's look at figure 2.6 to see the process of preparing financial statements. First, we need to prepare an income statement. An income statement shows the results of operation for a period of time. Was the company profitable? Or did it have a loss for the time period? To calculate net income or net loss, we subtract total expenses from total revenue. In the example on page 35, revenue was greater than expenses, resulting in net income. Next, we need to prepare a statement of owner's equity. The purpose of this statement is to show how equity changed during the time period. Remember the expanded accounting equation? Remember that equity, or the capital balance, is decreased by withdrawals, increased by revenue, and decreased by expenses? Well, revenue minus expenses is the calculated ending number on the income statement. So if we take beginning capital and add the net income for the time period and subtract withdrawals during the time period, we should calculate the ending capital balance. Finally, we need to prepare a balance sheet. The purpose of the balance sheet is to show the financial position of the company at the end of an accounting period. Do assets equal liabilities plus owner's equity at the end of the accounting period? In this example on page 35, all of the assets are listed on the left side of the page and total $136,850. The liabilities and owner's equity are listed on the right side of the page and also total $136,850. So the balance sheet is in balance, and assets do equal liabilities plus owner's equity. Let's take a moment to notice a couple of other important things about the balance sheet. First, all of the assets and liabilities shown on the balance sheet are the balances at the end of the accounting period. So we must also show the balance of the owner's capital account at the end of the accounting period. That's why the final number on the statement of owner's equity is transferred to the balance sheet. Please also notice the dates shown on these financial statements. Both the income statement and the statement of owner's equity are prepared to show information for a period of time. However, the balance sheet simply shows the ending balance in the assets, liabilities, and capital account at the end of the accounting period, so the date on the balance sheet is not for a period of time, but the end of the accounting period date. So that's the process of preparing financial statements. In our next and final video lecture for Chapter 2, we'll use the ending balances on our worksheet to prepare financial statements for Craven's Consulting Service, and we'll use these financial statements on page 35 of the textbook as an example of the proper format to follow. See you next time.